News coming in this evening. Still no stimulus deal, but the Treasury Secretary says it could come as early as this week. That's if congressional Democrats are ready to compromise. The latest economic data shows small business owners are more optimistic now, but consumers are less so. Are investors closely watching the progress of the new stimulus package? Talk with Lance Roberts over at Real Investment Advice. And chaos in Hong Kong. In retaliation to U.S. sanctions on Hong Kong officials, Beijing imposes sanctions on 11 U.S. citizens, including several lawmakers. Good evening and thanks for tuning in. A new bill on economic relief during the CCP virus pandemic could come as early as this week. That's what Treasury Secretary Stephen Mnuchin is saying after stalled negotiations.
Treasury Secretary Stephen Mnuchin said Congress and the White House could deliver the next economic relief bill this week.
I think there is a compromise if the Democrats are willing to be reasonable. There is still a lot of things that we need to do and that we've agreed on.
Last week, negotiations collapsed between Mnuchin, White House Chief of Staff Mark Meadows, House Speaker Nancy Pelosi, and Senate Minority Leader Chuck Schumer. But Mnuchin is positive a solution is near.
And if we can get a fair deal, we'll do it this week.
President Trump tweeted criticism of the way Pelosi and Schumer have handled negotiations for congressional Democrats and says they only now want to make a deal. Where have they been for the last 4 weeks when they were hardliners and only wanted bailout money for Democrat-run states and cities that are failing badly? Delays in talks prompted President Trump to take executive action. He signed 4 executive orders over the weekend that addresses some of the funding issues. Pelosi and Schumer have since criticized the effectiveness of the orders.
Looters converged on Chicago's downtown on Sunday night after police and a suspect exchanged gunfire on the city's south side. Here, an Audi that's presumed to be stolen smashes out the window of a store in the Gold Coast area. Chicago's mayor said the looting undermines public safety and breeds a sense of insecurity among residents. She says it wasn't just large chain stores. Small businesses and restaurants were also targeted, which she said is not justified.
There is no justification for criminal behavior ever.
Not the baby cars.
Here, crowds are seen breaking into a Tesla store where kids' cars were reportedly stolen. The looters reportedly broke into a PNC bank and also stole from Sally Beauty Supply and high-end stores like Louis Vuitton. The police report Caravans transported looters downtown after posts on social media encouraged looting. The police arrested over 100 individuals for looting, disorderly conduct, and battery against police. The police superintendent describes this as an act of violence against police officers and the city.
This was not an organized protest. Rather, this was an incident of pure criminality.
Earlier on Sunday in Chicago's Inglewood neighborhood, police shot a 20-year-old male suspect who first shot at police as he fled. The superintendent said social media accounts spread misinformation that the suspect was a 15-year-old boy in order to fuel the looting.
Mayor Lightfoot said that she will not seek military assistance and says federal troops are not needed to quell the unrest. And mayhem in Hong Kong today as well. Police arresting entrepreneur and media tycoon Jimmy Lai. Over 100 police officers then swept through the newsroom of the media company immediately after the arrest.
A Hong Kong media tycoon, Jimmy Lai, was arrested Monday morning under the region's new national security law. It's the highest profile arrest yet under the legislation. Hong Kong police arrested Lai and 6 other men. The official charged a suspicion of collusion with a foreign country or external elements to endanger China's national security. Lai is supportive of the region's pro-democracy movement. He remains one of the few Hong Kong elite willing to be openly vocal about protecting Hong Kong's freedoms. He is 71 years old. Lai's 2 sons were also apprehended. Lai founded Next Digital, the media that publishes the widely read Apple Daily, a newspaper known for its critical coverage of the Chinese Communist regime. It has also criticized the Hong Kong government during the past year of protests. After the arrest, a mass crowd of at least 100 police officers swept through the newsroom of Apple Daily. Police also allegedly searching the home of Lai and his sons. Hong Kong residents expressed worries that the arrest will negatively impact press freedom in the region.
I don't think the police should be doing this. After all, this is a media organization, isn't it? Hong Kong claims to have freedom of the press, doesn't it? So I don't think they should search the media's premises.
Hong Kong legislator Eddie Chu posted on Twitter that the crime committed by Jimmy Lai was operating a free press.
Hong Kong police also arrested the first foreign journalist under the new law. Freelance journalist Wilson Lee was working with Britain's ITN. Beijing also sanctioned 11 U.S. citizens, including Senators Ted Cruz and Josh Hawley. They've been outspoken against the Chinese regime's actions in Hong Kong. These new sanctions come after the U.S. sanctioned high-profile Hong Kong officials, including the leader Carrie Lam. Now, American banks there are suspending the accounts of clients who've been sanctioned.
Citibank and Standard Chartered are stepping up their reviews of Hong Kong clients after the U.S. sanctioned 11 Hong Kong and Chinese officials. Bloomberg reports Citibank is beginning to suspend accounts linked to some of the officials, and Standard Chartered has already suspended new account openings for the people on the list. Last week, President Trump sanctioned Hong Kong leader Carrie Lam and 10 others over Beijing's national security law that was imposed on Hong Kong. Western lenders are now cautious over their business dealings in Hong Kong and China, and Chinese lenders are vulnerable because of their need for U.S. dollars. The sanctions stop banks from doing business with the penalized officials and freeze assets and property they have in the United States. In retaliation, China imposed sanctions on 11 Americans, including lawmakers and leaders of organizations critical of the Chinese regime's human rights abuses. Bankers in the United States and Hong Kong are now trying to find a way to work between the two laws and avoid major consequences. Offenders of the new laws could risk getting fined or losing their business license. International banks that operate outside the U.S. won't be affected as long as they don't help the sanctioned officials with transactions involving U.S. dollars. The Hang Seng Index in Hong Kong fell 0.6% on Monday to close at a 6-week low. It's down 14% for the year.
And small businesses in America are starting to feel more optimistic. The CNBC indicator says that small business confidence rose to 53 in the third quarter. That's up from a record low of 49 in the second quarter. More business owners say they'll be able to stay afloat longer over a longer period of time. Among the 2,000-plus businesses surveyed, over a third said that their business conditions are good, about double the number from last quarter. About one-fourth, though, still say conditions are bad, but one group representing small businesses says if the economy opens, owners are seeing a light at the end of the tunnel. And a rent payment tracker has found that more people paid their rent in August compared to July, although the number is still lower compared to last year. The National Multifamily Housing Council, or NMHC, found that over 79% of households paid rent in August. That's for larger properties that are managed professionally. It's about a 2% increase compared to the previous month, but it did fall about 2 percentage points compared to the same period last year. Current relief measures are possibly narrowing the potential gap. The NMHC is urging the Trump administration and congressional leaders to restart their negotiations on the next relief package. But a new Federal Reserve report shows that U.S. consumers became more pessimistic about the year ahead. The financial situation in July, including the risk of job losses and the unemployment rate. The drop in sentiment comes after 2 months of Americans feeling better about their odds in the labor market. The shift reflects the impact of fresh restrictions meant to curb a resurgence of virus infections. The Fed report also said consumers put the odds of unemployment being higher next year at 39.3% in July. That's up from June, and it's still far below the record high of nearly 51% in March at the height of the lockdowns. And Wall Street closed mixed on Monday, with the Dow sharply outperforming the other two indices. The S&P 500 ended slightly higher, and the Nasdaq fell from the record high of last week. Shares of Kodak fell 28% today after the U.S. government blocked the $700 million loan to the company due to allegations of wrongdoing by the executives. The Dow rose about 358 points, or 1.3%. The S&P 500 gained 9 points, or 0.27%. The Nasdaq dropped about 43 points, or 0.39%. And are investors closely watching the progress of the stimulus talks, or a lack of progress? We talked to Lance Roberts from Real Investment Advice earlier to see what kind of outcome investors might be looking for. Lance, great to have you on as always.
Thank you. Glad to be here.
Lance, just how closely are investors watching these discussions on the new stimulus package? And if they are watching it closely, what kind of outcome might they be looking for?
Well, two things. First of all, is I don't think the stimulus packages mean as much as they did initially. And what I mean by that is that this is already kind of priced into the markets. It's important that we get it. What's really important for the markets is that we don't wind up with no stimulus, right? Because the markets have already kind of priced in that we are going to get a stimulus package, that this is going to occur. This money is going to wind up in the paychecks of households. But importantly, this current round that we're talking about now, if we follow through with only executive orders that happen over this weekend, it is actually less money. We're only talking about $400 more to paychecks, and that's only included if states agree to pick up the $100. They've got to do 25% of that $400, and they've got to set up an actual process for delivering those funds. So this is a real risk here that money may not show up. And nobody's talking about $1,200 checks direct to households yet. Everybody's kind of hoping that's going to come in more conversations with Congress, but that could be a real hickey here for the markets because the markets have priced in that stimulus continuing at this point to support the underlying economic growth, the earnings that we've seen for these companies. And without that, I think we'll see a fairly sharp slowdown both in earnings and the economy fairly quickly.
It's really been dragged out for the investors if that's the case then. And you were speaking recently, Lance, about the Fed and how the Fed have said the last thing in the world we want is deflation. And now for yourself, you said they might be saying that, but all of their actions are actually deflationary. First of all, we hear people complain all the time, we don't want inflation, we don't want inflation. Now, can you explain why the Fed doesn't want deflation? And then maybe you can tell us how their actions might actually be leading us there.
Sure, no problem. First of all, inflation is easier to control for the Fed policy, from a Fed policy standpoint, right? So if I start to get inflation in the economy, in other words, prices are going up, historically, that's linked to stronger economic activity, higher wages. So the economy's strong, wages are growing because you've got a strong economy. That's leading to price inflation because producers are able to charge more for the things that they're making. And so simply by starting to raise interest rates and tighten monetary policy, then you can slow economic growth and quail inflation. So they can keep it under that kind of a guide from a Fed policy standpoint. The problem with deflation is it's psychological, because once you get deflation into an economy, then consumers say, well, I'm just going to wait to buy that house or that car or that new television because prices keep getting cheaper. And that's a very hard psychological habit to break. And lowering interest rates towards zero doesn't break that cycle. And this is what's called the liquidity trap. And this is what the Fed is currently in right now, which is I lower interest rates and I do not get stronger economic growth. I do not get an increase in monetary velocity. In other words, money flowing through the system that does not pick up strength. And there's no demand for debt. So that's where the Fed finds themselves now. And despite the fact they continue to do things like lower interest rates to zero, do monetary bailout programs, provide more liquidity for the markets, bailing out Wall Street, all these things have not led in a decade now to stronger economic growth, rising inflationary pressures, stronger wages, things that lead to better economic prosperity. All it's created was a deflationary pressure. Companies went and did more productivity, outsourced more jobs, and now 10% of the economy owns 80% of the stock market because of that. So now we have this big wealth gap. So everything they do monetary policy-wise is actually working backwards from what the intention is.
Interesting. Lance, I appreciate the update as always. Thanks so much.
My pleasure. Thank you.
McDonald's is suing former chief executive Steve Easterbrook. He wants him to return tens of millions of dollars in severance and benefits, saying he lied and covered up sexual relationships with at least 3 employees.
9 months after McDonald's fired CEO Steve Easterbrook over a non-physical consensual relationship with an employee, it's suing him. In a filing Monday, McDonald's board charges Easterbrook with lying and hiding evidence during an internal probe that showed that he had sexual relationships with multiple employees, violating company policy. The company's board also says he destroyed information regarding the relationships. It launched the investigation after getting a tip from an employee. The filing says a hamburger chain wants to get back the lucrative exit package it gave him that's reportedly worth tens of millions of dollars. McDonald's says Easterbrook lied so that he could leave the company on more favorable financial terms. The restaurant chain, known for its family-friendly reputation, says it found out that Easterbrook had physical sexual relationships with 3 McDonald's employees in the year before he was terminated. What's more, the company says he awarded shares worth hundreds of thousands of dollars to one of them. Easterbrook could not be reached for comment.
And still to come, Amazon is in talks with the largest mall operator in the United States. Find out why they're interested. And Huawei is running out of smartphone chips. Company executive says chips producers stopped accepting orders after the second round of U.S. sanctions. That and more after the break. Twitter is interested in buying TikTok's US operations. It's talking with TikTok's Chinese owner ByteDance. But Twitter would have to outbid Microsoft and complete the deal by September 15th. University of Michigan professor Eric Gordon says Twitter can't afford it and doesn't have the borrowing capacity. He also said that Twitter shareholders might prefer that management focus on existing business, but Twitter shareholder Silver Lake is reportedly interested in helping fund a deal. Sources told Reuters that Twitter also said privately that its bid would face less regulatory scrutiny than Microsoft's, and that the company wouldn't face pressure from the Chinese regime. Unlike Microsoft, Twitter is not active in China. And always the innovator, Amazon wants to turn closed department stores into logistics centers. The Wall Street Journal reported Sunday that Amazon would convert former or current JCPenney and Sears stores into distribution hubs. Could be a win-win situation. Amazon would get more space closer to where customers live, which would help speed up shipping times. Mall owners would get a cash-rich tenant to replace their bankrupt anchor stores. In other news, U.S. sanctions on Huawei seem to be taking effect. The company executive says it's running out of chips for its smartphone production, and its upcoming Mate 40 phone could be the last Huawei smartphone to feature its own chips.
Huawei says it's running out of smartphone chips because of U.S. sanctions. The company's consumer unit president Richard Yu said production of its most advanced chips will stop September 15th. And he said the company is unable to make its own chips. Last year, Washington cut off Huawei's access to U.S. components. And in May, the Trump administration barred vendors around the world from using U.S. tech to make components for Huawei. Yu said this year might be the last generation of Huawei Kirin high-end chips because chip producers stopped accepting orders after the second round of sanctions. Now Huawei has no chips and no supply for smartphone production. In June, Huawei became the world's #1 smartphone brand, surpassing Samsung for the first time. Demand was strong in China, but sales abroad fell 27% from a year earlier. The Trump administration, the Federal Communications Commission, and others have labeled Huawei a national security threat. A former Chinese military engineer founded Huawei in 1987. Huawei denies allegations it helps the Chinese regime spy on users. But under Chinese law, all citizens and organizations must help with national intelligence efforts. Washington is lobbying allies to exclude the tech giant from their networks because of security risks.
And U.S. tech giant Tencent records its biggest loss over 2 days as it becomes the latest target in the U.S. security clampdown. It recorded a $66 billion two-day loss from Friday, followed America's move to ban the company's Wechat app. Stock fell 4.8% today, creating a cumulative drop of 9.2% over 2 days. It's the worst drop for Wechat since 2011. Tech stocks in Hong Kong led declines in the region Monday, with the Hang Seng Tech Index falling as much as 3.6%. The sector was also among the weakest performers in China, with the Chinex Index dropping as much as 2%. Suppliers to Apple computers saw some of the biggest declines. And still to come, the virus has hit most of South Africa's diamond industry hard, but not all. Find out how some diamond polishers are staying afloat after the break.
大提琴不仅仅是一件乐器，它是有生命、有感情的，需要我们精心的照顾。往往我们一个小小的动作，可能都会对人情绪产生微妙的影响。天音的品牌是福星，我们对于传统的理念很荣幸，被神韵艺术团选为指定供应商。时间是酿造音色的不可替代的陪伴。我跟大提琴已经有60多年的友情了，每一把琴都有它自己的个性，熟悉它，才能真正发挥它的潜力。所以，我希望给你的每一把琴，都是首先我所信任的。
South Africa is famous for its diamonds, and while the virus hurt most of the industry, some businesses have actually seen a rise in profit ever since the lockdown was imposed.
South Africa's diamond industry is famous worldwide, especially for supplying gems for the British crown jewels. But now it's looking closer to home to revive its fortunes following the virus slump. Even before the pandemic, diamond prices and demand were weak. Thoko's Diamonds, a South African company whose business was based on selling rough and polished stones, said it was turning to jewelry. In a typical year, the family business would supply more than 500 carats.
This year, we've only sold less than 20 carats. So you can imagine in terms of revenue how much we've done.
Thoko's hopes its new line of earrings will appeal to the local market. The company will launch a jewelry line early next year. But many of the businesses who polish the rough diamonds say they have been pleasantly surprised by the lockdown. That's because amid enforced proximity to their loved ones, many have started to buy jewelry as a means of feel-good spending. South African cutting and polishing firm Nungu Diamonds said its custom-made jewelry sales have grown 60% since South Africa imposed a strict lockdown in March. Customers used their weeks at home for online consultations and were lining up for their purchases when stores reopened in June.
Never let a good disaster go to waste. I'm by no means suggesting that COVID-19 is a good disaster. What I'm basically saying is there has been opportunity in it.
He says June was the best month in a year, with sales including engagement and wedding rings. Contrary to the trend of rising unemployment, Nungu has hired an in-house jewelry designer.
That's the latest business updates for today. Thanks for tuning in, and we'll see you again tomorrow.